Last day of November. This is Clark Neighbors with the commodity recap for the balance of the week of November 30th, and let's just kind of look at a few things that have happened in the last week or 2 weeks as far as the markets are concerned. For this week, corn was about unchanged, beans up 15 cents, wheat up about a dime. More interestingly, though, for the month of November, corn down about 12 cents, beans down about $1.20, and wheat down about 15 cents. We have seen some weakness in the markets this week and going back through the month of November, especially in the soybean complex. Energies up a couple dollars in the last month, and the dollar, for what it's worth, continues to hover around that $80 mark. 79 to 81 has been the going range in that dollar for quite some time. That's a factor we need to watch as we go through the winter months. Technically speaking, corn and wheat have both been in a fairly tight trading range. Corn over the last 3 months seems to be in a trading range of about 720 to 760. Wheat on the other side, we've been in a very narrow range, going all the way back to mid-July, basically since harvest in the wheat. Soybeans, we're well over $4 off the summer highs. Yes, at the same point, we're up about $1 from the recent, about 70 cents from the recent lows. So the bean market, the bean complex, has seen the most weakness over the last 30 days. Technical number to watch in the beans, 1460 is a 200-day moving average, and here late this week we seem to have some trouble getting through that level. A couple factors that were newsworthy this week. One, deliveries of the December contract. That started this morning with some corn deliveries, fairly heavy wheat deliveries, having some impact on the spreads, with corn spreads seeing the widest levels on the D-Smarts going back to this summer. And in somewhat reflection of the deliveries, the issue or the problems currently happening, and more importantly down the road potentially happening with water levels in the Mississippi River. Will there be closure? If not closure, will we see some impediments as far as logistics on the river? Going to be interesting to watch. Another week down the road there should be more information on that, but right now things look a little grim unless we see some more rains. The key is how that's going to have impact on the market. I don't think directly it has much impact as far as the futures are concerned, but it could have some impact on basis and spreads and logistics, and we could see grain moving in different modes that we haven't seen in quite some time, namely by rail, but not so much rail from locations that we haven't seen before. So bears watching. Ethanol margins, from a demand perspective, ethanol margins continue to be in the red right now. That's a little concerning. Most ethanol plants are probably running something sub what capacity is right now because of those margins. I think from what I hear, most ethanol plants have pretty good coverage as far as corn needs through the month of December. And then as you get into the new year, that may change a little bit depending on how margins are after the first of the year. Export trade, corn, we had one good week of export sales a week ago. This past week, this current week, we had some pretty pathetic sales again. Corn exports just continue to be very disappointing. I'd like to see that change here a little bit over the next 2-3 months if we become a little more competitive in the world market. The swing factor in that is also going to be the price of wheat in the world market versus corn and how much impact that may have. Right now, that's not a big factor, but it could be down the road. You know, on the other side of the coin, soybean sales are very impressive on the export trade, off to one of the best starts we've seen in years. And at the same point, soybean sales, which have been very strong over the last 2 weeks, USDA's soybean sales year to date are above what the trade is looking for. I should say the USDA is looking for the entire year. So the function of the beans, the function of these exports are going to be interesting to watch, especially with the logistical problems we see in the river. So stay tuned with that. Cash markets are going to be real key. Cattle market, continue to see fairly positive markets now here on Friday. The cattle market broke fairly aggressively late in the day. It almost seemed like in many of the ag commodities today. We saw pressure, might be some end-of-the-month selling. Cash markets this week were steady. Some are looking for better cash as we go through the next 3 to 4 weeks based on lack of supply of ready cattle. All the while, we're at or near all-time highs in the cattle market within a few dollars. All the while, the fund length in the cattle is the smallest it's been in 3 years. Just a couple seasonalities to be aware of as we go through December. The first week of December tends to be kind of negative on the grains. We've seen many years where you put in like a seasonal low that first week of December. We'll see if that falls. We see that pattern persists this year, but then the final 2-3 weeks you tend to firm things up into the final few weeks of December. Swing factors to watch. Obviously, South American weather is going to be key to watch on soybeans and potentially on corn. Right now, weather seems to be pretty good in South America. If there is some issues, there's some areas in Argentina that are too wet, which could constrict some of the late corn planting, thus may add some bean acres in those areas. And there is a small area of southern Brazil that's a little dry, but all in all, at this time, things look good. Keep in mind 12 months ago, things look good in South America. Those changed in the winter months, so that South American weather will be key. I mentioned earlier the Mississippi River situation. That's going to be key. And you can tie in U.S. weather. That seems to be getting a little more play, mainly in the hardwood winter wheat areas in the southern plains, but the western corn belt also is something to watch. The fiscal cliff as we go through the end of the month, the bargaining session between Congress and the administration. It seems to be getting more media play than it will anything else, but watch the dollar and watch the stock market on its reaction. Kind of a side note on that, on the macro side, Europe continues to see just real, during the recession, real issues as far as employment numbers are now the lowest they've been since the Eurozone started. Keep in mind you have areas of Europe, namely Spain and Greece, that have unemployment rates well over 23-24%. And I saw something this week that the French unemployment rate is pushing 12%, which is the highest they've seen in several years. All in all, though, fairly quiet week. Volume seems to be getting into holiday mode. So with that note, during this time of year with Thanksgiving and Christmas, the market tends to slow down. But with the Christmas and holiday season, we have BIS Commodities would like to wish all of you a very happy holiday season. And with that, we will talk to you next week.